Hello guys, and welcome to my channel. In today's video we're going to be talking about top-down analysis on synthetic indices. Now what some of you don't understand is that trading any pair, be it currency, be it binary, be it stock, or be it synthetic indices on derivative, we have to follow what we call price action. And then when we're talking about price action, this is where top-down analysis comes in. We don't just take trade anyhow. There are some parameters you are going to put in place, which is called planning before you execute trade. Now, this is why some traders lose to these brokers, because when you don't have a planned program in place for taking trades, definitely you have already planned to give them your money. When you don't have a planned program or process in place for executing trade, then you have already planned to give them your hard-earned money. Now, as a trader, you need to work with at least minimum of 2 or 3 time frame. That means you watch what the higher time frame is doing, then you take your entries on the lower time frame. Yes, because the higher the time frame, the higher the signal, and the more then the higher the probability of your winning. Yes, the higher the probability of your winning. So this is where you need to base or you need to build your trading techniques, and this is where brings about the trading or top-down analysis. Now, when we say top-down analysis, is by watching from the higher time frame down to the lower time frame, then deciding to take your entry at a very high probability point. That means point where you have high probability of winning than losing. So in a nutshell, I'm just going to give you a sketch of what it means by analyzing from a higher time frame to a lower time frame on synthetic indices. Please, we are doing this. This applies to every other um, stocks, currency, or crypto, but we are only focusing on our synthetic indices where we trade the boom and crash, the volatility, the jump, and others. So I'm just going to give you a simple way you can do your top-down analysis for any particular pair, then executing your trade. So just watch. Now, what do we mean by taking or observing from higher time frame? Now we have the H1 time frame, which is 1 hour time frame, 15-minute time frame, 5-minute time frame. Then in the H1, we are looking for areas of interest in the H1 time frame, confirming it on the 15-minute time frame, then taking our sniper entry in the 5-minute time frame. Now let me just give you a scenario of what I mean by going to the H1 time frame. Now let's say in the H1 time frame, what we do normally wait for is area of interest, our point of interest, which is the POI. So for those of you who have been in the trading class, by now you should understand what I mean by POI and how we use softwares to identify these areas. So for those of you who are new, after watching this video, you can go through other videos where I talk more on how to analyze pairs on synthetic indices. It's going to help you a lot. Now, let's assume that we want to take a sell entry on the lower. Maybe we are looking for a sell setup. We don't just look for a sell setup. It is what we get in our H1 that determines which entry we are going to take. So let's assume we have a sell entry in our H1. And how does sell entry comes in? Maybe price got to this level. So let's assume this area above here is a resistance. So price got to that area. Price got to that area or somewhere around that area. Then we notice a move like this. Initially price was going up, and when it approaches the area, see it making a U-turn. So when it make a U-turn, what we notice is that price what break a structure. Initially, this move was towards the up, and now this was the what higher low. So price has broken the higher low this way by coming down. So the next thing you are going to be expecting is you want to see price come into this zone. This is on the H1. Now, for those of you who are in the training class, remember we have in place a particular software that highlights this for us. So immediately price break structure, we have a software that highlights something like this for us. Immediately there's a break of structure around this axis where we have the BOS. BOS simply means break of structure or break of market structure. So when we have something like that, in our H1, when price come into that zone, this become our area of POI. This become our area of what? POI. That means area point of interest. So this point become point of interest. POI. POI. So before we take a sell order, because when price comes in here, definitely we want to see price giving us a formation for down move. And at this point, this area here, which is the high where price got to, and this area here, which is the low, is what we want to leverage on. So at this point, in our 15 minutes, we want to see price creating a formation, a candle formation, whereby we want to see either a reversal formation for downtrend, a reversal formation for downtrend. The reversal formation can be maybe a bearish engulfing bar, just to indicate that price is ready to go down. I will say a bearish engulfing bar. This simply means we want to see, maybe let's say for instance, I'm just giving a scenario. When price get here, we want to see a bullish candle like this. Then we want to see, and this bullish candle can be the last bullish candle before price give us down. So then after that, we want to see maybe another little bullish candle here at the top. Then the next thing we want to see is an engulfing bearish bar, engulfing bearish candle, which can just drop. Sorry, you just want to see something like this. So, which means indicating that there's a push towards the downside. Now, we are just looking for a formation of down move in the 15-minute time frame. Why in the 5-minute time frame? We want a similar scenario that took place here in this H1 in the lower time frame. And what did I mean by similar scenario? So we want to see price do something like this. We want to see price giving us this kind of move. Immediately there's a break in structure. The next thing you see is it will highlight area of interest also in the 5 minutes. Then you see a BOS here. Then we want to see price come into this place. Immediately it comes here, already in 15 minutes, it has already given us a confirmation of down move. So by then we take our entry. This is where we take our entry. Price can still be within this point, and it will give us all this move here. You know, its movement on 5 minutes is faster compared to that of 1 hour. So the next thing we want to see is We take our sell order at this point, then we put our TP here. So this point become area of exit for us. If you are new, because we are trading in between this 5 minute high and this 5 minute, but in some cases we also have the Fibonacci included in our strategy. That is, for those of you who are in the class, you know, we also have the Fibonacci included in our strategy. So in this case, we want to see price get to the 50 level of the either the H1 50 Fibonacci level or the M5. For scalping, you can use the 50 level of the M5. While for maybe you want to hold it a bit longer, you can use that of the H1. So the H1, sometimes what I do or what I advise new traders to do is use that of the 5 minutes. So as time goes on, when you start understanding the formation and the formula behind this strategy, you can start using your H1. Because if you are new to the system, you need to build yourself from the scratch. You don't just assume or follow everything. It is possible that price might not get to this level here and price will continue. But in the 5 minutes, it's going to get to that level. It's going to get to that low of the M5. So in the H1, it might not get there. So that is why in the top-down analysis, we always highlight the area of interest on the higher time frame, which is the H1. Then when we see price giving us that, we wait patiently for price to go into those our area of interest, which is the point of interest. Then wait for confirmation on 15 minutes to see a formation or a reversal pattern, either a formation towards our position or a reversal pattern. Then we take trade. So when you take trades like this at this point, your stop loss is going to be at the peak, at the top here, top of the resistance bar. We also have software that's going to highlight areas of support and resistance in the pattern or the trading this thing. For those of you who are in the class, you have it already, but if you have not joined, I'm telling you now that these things is all in place already. So all you just need is we give you those softwares, we teach you how to use them, then you practice them, then before you know it, you understand exactly what price is doing. So this is going to be our area of stop loss, and here is going to be our area of TP. So for those of you who are still asking, we are going to put our stop loss here, that is SL abbreviately at this point. Then our TP, which is take profit, will be here, TP. This also applied to that is if you are using the H1, but if since it is 5 minutes, you just put your stop loss at the high of this H1, but your TP should be at the swing low of the M5. So you will see that when you compare the distance, the stop loss is a bit tight compared to, because if you are to, let's assume this is where we are taking our trade. If you place a sell now, you see the distance price will come compared to the distance it is going to move up. You see it's very little, so you won't be losing all your money to the broker, but when it fall on profit, you make most one third ratio 1 to 3 of your stake. So this is just is simple. When you hear the word top-down analysis, top-down analysis is not a big uh, issue, but some people don't understand when they say top-down analysis. Top-down analysis simply means watching the price from the higher time frame. I am understanding areas of interest, then follow it down to the lower time frame to execute trade. That is what top-down analysis means. But in today's trading, majority of the new traders are finding this very difficult. They will tell you what is TDA or what. So sometimes the confusion you have is the terms they use. Yes, the terminology is being used. So, but in my training class, it is very easy. It's very easy because all these things you are not the one to be plotting it out. And the issue most traders or new traders have is understanding on how to highlight this area. Yes, they find it difficult highlighting it. But in my training class, or the one I program majorly for synthetic indices, Everything is in place. So I'm going to show you, I'm going to take you to the chart now. Then I'm going to show you some of all these things I said. Then you'll be able to identify it. You're not the one to draw it. The software that are going to do all these things are already in place. So it's only to teach you how to use them and how to analyze them and the reasons why we are doing that. So I think by now you should understand what top-down analysis mean as a new beginner. So let's go to um, the chart. Let's go to the chart so that let me show you something. Now, this is okay. This is crash 1000. I think I have something on synthetic indices earlier on. Okay. Now, here on synthetic indices, you can see now that this highlighted area here is an area of interest. Let me make it bold a bit. Okay, it's bold. This area highlighted here are area of interest. Why is it area of interest? First, you can see that there is a BOS here. Immediately we get this BOS, this part it automatically comes up. All these things are automatic. They are auto, so you are not the one plotting them. Once you install them, it will be the one to plot it for you as a new trader. So when it plot it out, this is what you do. Immediately price comes in. We want price not halfway, just like what you see price did here now. Price came into the box. Can you see? Immediately price comes into the box. This is on 1 hour. Then you go to your 15 minutes. In your 15 minutes now, you'll be looking for a downward formation. That means a price towards the downside. A price or a sign of reversal towards the downside. And when you're able to identify it, the next thing you go to your 5 minutes looking for similar formation. Immediately you get it, like I explained earlier in the diagram, then you take your sell. So these are, you can see I took this sell here and you can see it was on profit. Only this distance here, let me show you something. Only this little distance made over $5 for just one single trade. So imagine you have enough equity, like let's say you have $50 or $100 in your account and you open two trades. Only two trades for this move will give you $10, which is approximately 10,000 naira for those of you who are in Nigeria. And 10,000 is something that is just a day. So tomorrow you can see other pair giving you the same formation either for buy or for sell. Then you also shoot the same, also leverage on it, and this is how you keep compounding money. And before you know it, at the end of the month you have reasonable thing. The only problem you will have or the issue you have is if you are being greedy or if you are being impatient. If you are being impatient, you can see how many hours it took, if not a day or so, before price was able to come back there. Some people might not have that patience. They were like, oh, see the price is here now, let me quickly. No, be disciplined enough to wait for price come into that zone before you execute your trade. If you are disciplined enough, you will make more win than loss. Yes, that is just the plain truth. You make more winning than lost when you are able to be patient for price to give you all this um formation. So now I believe let's check if we even have any opportunity in the 5 minutes. Let's see. Let's see what is the trade pattern is like in 5 minutes. Okay. Anyway, we are looking for a break of structure towards the downside, then price to highlight area of interest. Since we can't get, definitely price must have done that. Price must have done that. I think at this point, there was an area of interest at this point where I took. Now you can see that at the top, you can see resistance. So this resistance is not only on M5. When you go to the H1, you also see that it is there, indicating that price is at a resistance zone. That is why I told you that before you notice those patterns, price must have get to a certain level showing a rejection. When you go through the videos, for those of you who are into this training already, you know the reasons why price has to go back, because I explained a particular point that there's for price to keep giving you higher high, then there must be an impulse. Then when there is a correction phase, or a change of character, that is when we start seeing the break of structure either to the downside or to the upside. So for those of you who are in the training class, that shouldn't be something new. Then for those of you who are yet to join, like I said, check the description below. You're going to find my WhatsApp number so you can communicate me via that number. Then we go in, we discuss on a way out. So now let me take you. This thing happens all in the as in either the volatility indices, the crash. Even on here, you can see I took a trade here on the M5. And let me just quickly give you a reason why I took that trade. There was a break of structure here, which created this this other block. So when price came in and price shoot out, I needed price to come into that zone. Immediately I see price shooting out. Definitely, I took my buy, though I was a bit late. I took my buy, then I used this high as my exit because I'm using the 5 minute. So if you go and check now, definitely it might be retracing up to the level 50 of the H1 or maybe probably the level 61 of the Fibonacci H1. That means Fibonacci retracement. So we can go, let's check what happened on the H1. So we'll see the clearer picture. You can see it is going to where the level 50. So you can hold it up to the level 50 because little above the level 50, we have a resistance zone. And another method we can use is checking the imbalance, area of imbalance. I have explained that in my videos. You can see now it's telling us that price has to fill all the way to this point, but it might not be instantly. So we only trade based on the information we get from our our M5 to our what's it called, our H1. So you see, trading is interesting, but some people lose money to this broker because one, they are impatient. Two, they don't have a strategy in place. Yes, when I say strategy, they don't have strategy that moves along with price action. That is why majority of them who are trading on the mobile using the mobile phone are indicator based traders. They are sorry, indicators and signal traders. They only base on the indicator setup. So and that is not enough because all these indicators on your MT5 for the mobile phone, they do lag. Yes, that means they lag. So sometimes it will be difficult for you to identify at what point it really made profit and at what point it lost. So, but with this clear picture and all this software here, and where I'll be giving you full details on how to use it, you'll be able to trade like a pro. Synthetic indices is most of the easiest pair to trade because we don't have other factors affecting forex on this platform. So please, if you are new to this platform, kindly subscribe, share because there are many people out there who are looking for informations like this to better their trading, most especially on the synthetic indices on deriv. So please share it, subscribe, and then let me know your opinion on the comment section. So with this, I'll be able to come in and guide. But if you want an advanced class where we are going to be using softwares like this to determine the price, to give us what price is doing, because here I don't do much. Immediately I open my chart, I know what price is doing, I know where I'm waiting for price, I know what reaction I want to see. So this has limited my risk so much that sometimes I even hardly make losses. Yes, I hardly make losses because I have a programmed system in place. Now let me teach you one thing. If you are new to the platform, which is Deriv system, don't for any reason get a bot. That means a trading robot. No, this is the mistake new traders do make. Don't quickly go and be looking for a trading robot because this system might fail you when you are using only robot without having this knowledge. But a systematic system or a software that is going to explain what charts, what the price is doing is more better than a robot because robot will only relay straight based on how it's being programmed. Yes, there are parameters being used to program this robot, so it will only trade based on the parameters, and those parameters might not be suitable for the market at that moment. And before you know it, after making little profit, it will strike into huge losses. And you know how volatile all these pair on synthetic indices are. So please do me the favor, don't use robots. Rather, look for let's I have it. I can it's what I'm doing. I can teach you how to use softwares like this to track the movement of price. Only thing you need only thing you need is patience. Just wait for it to get to that level where we are looking for reaction, then execute. You see that even though you are going to lose, you are not going to lose all or even one third of your equity or your capital. Then you'll be having more wins compared to losses. So please make sure you share this video, put on your notification bell, hit the subscribe button so that anytime I'm bringing this up or talking more about it or bringing another strategy, you'll be among the first to be informed by YouTube so that you get the notification immediately. Because in this platform, all I want to do is just show you simple ways how you can trade synthetic indices in the right way and the right approach. All right, I think that's the end of this video, guys. Please do me a favor by uh uh hitting the subscribe button, because with this is going to ginger me to do more and bring more uh info to you. Cheers, guys. Have a nice day, and thanks for watching.